All right, welcome everybody to the Pro Trader webinar today with Jack. As you guys know, all week it's been Bookmap coaches, Bookmap Academy coaches. Jack has been one of the earliest coaches, the earliest coach here in the Bookmap Academy. Poor guy had to wait quite a while actually before we kind of got the Academy up and running. Anyway, Jack is here. He trades stocks, futures, and options. Next slide, Jack. Yeah, he's entirely self-funded trader, began his markets journey in the early 2000s. Upon moving to graduate school in 2013, Jack utilized his undergrad background in mathematical analytics, leading to volatility and pricing models. So we're talking about some rocket science here. These models have anchored Jack's trading since he's leveraged level 2 and time and sales data. Since he's leveraged level 2 and time and sales data in a variety of markets, macro fundamentals and market structure help frames Jack's market bias, including futures, mega cap, options, and hedging strategies. Jack, if there's anything more you want to add on that, then let's get to the disclosures, and then we'll let you go live here. Okay, general disclosure. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo, paper trading mode and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. So welcome, Jack, and take it away.
Thanks, Bruce. Thanks. So yeah, just kind of a little bit extra in the background there. So I am a United States Marine Corps veteran from, well, a little over 5 years, got out in 2009. It was a long time ago. That kind of was the foundation of like my discipline mostly. As a young high school boy, I was not ready to really do much. So I needed to figure that out, and the Marine Corps helped me. Just like it helped my parents. So as you can see, that kind of became a theme early on. After graduating and getting out of graduating boot camp, finishing my tour in the Marine Corps, getting out, I decided to go to college, and I got degrees in mechanical engineering and mathematics. And it was because of the Marine Corps that I was really able to do that on multiple levels. I used the GI Bill to help fund it. I used a lot of other Texas veteran benefits to help me there as well. I also received a Pell Grant for a couple of semesters. So there's a lot there that really helped me get there. After that, I went on to grad school for a little while, and from there I started basically doing my own independent portfolio management. And everything I've done since then has been essentially systematic and very mathematically oriented, as you can tell. My market experience outside of that, currently I work and interact with Spot Gamma daily. I have helped and was integral in the development of the trace tool, tape, synthetic OI, and the compass development. So if you know of any of those tools, I was very much involved in all of those with the rest of the Spot Gamma team there. Previous to that, I do a lot of beta user feedback, and this is still kind of ongoing as needed kind of things. I love to volunteer my time for tools, including tools like Spot Gamma. The reason I was able to do that with Spot Gamma was because I had contributed so much feedback before. Similarly, I contributed feedback to a lot of Bookmap things, Market Pulse, the Trading Journal and Statistics, a couple of the other tools that we've had over time. I've been able to help provide that feedback. I've also been involved in my own indicator development on my own to help my own trading, right? That mathematical approach. And I love model creation. So involved with all of that, you got to integrate it all, and that kind of gets us to technology integration, kind of building all of these things and being able to visualize them cross-platform. So utilizing cloud notes within Bookmap, utilizing trading view levels there within Spot Gamma stuff so I can collaborate between the three platforms really helps me throughout all these processes, and we'll see that. But for me, trading is really about these three pillars, right? And it comes down to community, journaling, and education. So as Bruce mentioned, I was one of the first coaches involved with the Junior Academy here. And it's because, to me, traders need a community. I don't necessarily interact with a lot of the traders here on the same level because that's different from my trading style. But traders need places to communicate, share thoughts, share accountability. You know, when you have a strategy that is broken and everybody who looks at it would see it's broken, you need somebody to tell you that's not going to work, right? You need somebody to help you and nudge you in the right directions. And that comes with community. And to me, community and journaling are the 1-2 punch to start everything, right? You don't even necessarily need education. You need people to keep you accountable early, and you need to be able to document what you're doing. From there, you can learn anything. It's about having those two, which kind of leads us to education. And that's really where I do the most bulk of my work. And that's just helping people understand these complex topics. So when we're talking about understanding order flow or level 2 time and sales, understanding those kinds of platform specific things, I've helped with Bookmap users over the last 3 years, just helping these kind of topics. I also help with spot gamma users, understanding options and order flow. I even help with Twitter users occasionally when they message me, or X users, depending on your name preferences. So it just depends, right? And my DMs are always open. So you saw on one of the first slides here, you can always reach out to me on Discord. I am absolutely available. You can ask me any questions about the market. I will give you my honest answer objectively. Could be about a platform, it could be about anything. I'll give you whatever my honest answer is. And I don't restrict those DMs to if you pay for a service. I don't have a Substack or any of that stuff. You ask me a question, you get a good answer. And that's the best I can give you. And I believe in that. And I believe that if I give you a good answer, you're going to help somebody else later on get a good answer, right? And that's kind of the mentality that I work around. Now, my trading style is pretty much tried and true, right? I like key levels, I like order flow, and I like trend. Why? Because I want my order flow to confirm my trend to my key levels for me to take my profits and walk to the casino and cash out, right? That's exactly the way I try to do this, right? Trend setups keep me on the right side of trend. That makes sure that I'm not going long in a downtrend. These are very, very important kind of concepts. And then order flow, again, kind of keeps me sane in that element, right? So in Bookmap, if we're seeing a strong downtrend, which we're going to see in a second, I want to be able to recognize that, right? And then the key levels are my levels of interaction. These are the levels where I want to see market interaction. It's where I expect to see market interaction. So for me, it's not just liquidity within Bookmap, right? I'm looking at liquidity in Bookmap, but I'm also looking at gamma levels within the options complex, which are going to foreshadow where liquidity is going to interact, right? And I know these because of dealer hedging mechanics, right? So I'm looking at confluence. Now, if you have questions about any posts from anybody who's contributed in the Academy, you can go up here and you can search this stuff in Discord, okay? So you can search from whoever the user is and then whatever channel that they might be doing, right? So in the newer channels, you'll see a lot of people post in the Academy. So if you have questions more recent, that's great. But there's also the Blue Jacket channel, and you can see it over here on the left. This is a good channel to also search through. This is where people who, when they're first competing for the Blue Jacket, they'll probably put in a bulk of their content there. Bulk of my content that I'm going to talk about today is in that channel. It's not changed, and it's been there, I think, 3 years, a little over 3 years now. So it's really good stuff. I recommend you use it. I put the slide in here for this reason, so go check it out. But this also teaches you how to search other people's stuff in Discord. So if you do utilize community like the Bookmap community, and let's say you like Vinny V's trades here, right? And you like his style, you like the way he's annotating stuff, and you see the market the same way he does, right? Well, then you would just come up here from Vinny V, and then in Bookmap Academy, and bam, you've got your own little search for Vinny V. You can see all his posts, and you can even make sure you can see it to where it'll show up like his images as well. So really important stuff, kind of figure out how to do that. That'll help keep things a little bit easier to see because Discord can be just kind of a scrolling chat. So understand how to use it. Now, kind of going into what I was talking about in the Blue Jacket channel and kind of the way I look at the markets from a trend strategy standpoint is I don't like counter trend trading blindly, right? I want some reason for me to be counter trend trading. I want there to be some confluence. Like if I can estimate where the counter trend is, then I can know where my max profit is if I was already in the trend. And we'll see an example of that in a minute. So I harp on in the Blue Jacket Academy, or the Bookmap Junior Academy, do not counter trend trade without a reason. Have reasons. And there's always good reasons to counter trend trade successfully if you look at certain things. And I'm going to kind of go over some of those frameworks here. And I break them down into a macro and a micro trend. So think of it as like a longer term trend and a shorter term trend, right? So the macro is that primary directional bias, that longer time frame. When you zoom out on a chart, it's obvious. It's that kind of stuff, right? Now a micro trend is that quick turnaround, right? Not the little ups and downs we see, but like the clear, like, oh wait, this is an opposite candle all of a sudden, those kinds of things, right? And we'll see another example. Today is actually a perfect day for all of this discussion too. So it's fantastic. So that's micro trend. So kind of when we look at this, would we consider this an uptrend? Probably not, right? Now, there might be some people who say, yeah, it's a downtrend, but over here, there's not really a trend. Okay, we're looking at only 25 minutes, so we'll give them that little argument. So let's zoom out a little bit more, right? Is this an uptrend? No, not at all, right? So this is today from the morning at the start, basically when London opened, right? Now you can see that this is a consistent downtrend, but at the same time, look at how far extended we are below, right? Like, look at how big this initial move was right off the rip. Now, is this a market I want to jump in and continue shorting? No. Is it a market I want to just be immediately long in counter trend trade? Absolutely not. Now, if I was in a put position, which is what I was, if I was in a short position, meaning I want the market to go down, this is a potential area that I might want to look to take profit. But what confluence do we have here? What other elements do we have? And we have a couple. One, we have that liquidity patch that we're looking at, right? So we had this right here, and it continued to develop and really start strengthening as we made that push lower. So that's one good confluence. And then the other is going to be in our other tool here, Trace. So now this is Spot Gamma's tool that looks at the options positions market. Now, we don't need to get into detail here because it could get confusing for you, but let's just say that this was a pre-market level that I was looking for early on for that reason. I was not supposed to do that. Let's see. Okay, there we go. This was an area we were looking at. Now, I did not think we were going to strongly break through that. I expected a reaction at this level, especially early on if we push lower, which we did. So this gave me a good opportunity because I was already short to take profit and understand that above us is negative gamma. And I expect the market to move freely through negative gamma. So this is just kind of like my visual, my understanding of how the market will go. Now, I'm going to fast forward this, but don't pay too much attention. Just kind of follow the visual and you'll understand. I'm expecting free floating movement up through red, but kind of staggered movement near purple. And as we go through this, staggered movement through purple, considerable movement up through red. And then as we start getting towards that purple right here, you can see how this is where we started consolidating. So this gave me my bias there as well. So kind of showing you two things at once here. Now, if we go back to the presentation, hold on, let me move this. Oh, I did that. Sorry about that. Okay. So kind of going back here, we can see that downtrend. We expected some consolidation in this area, which we got. We saw that already. And then we expected some more kind of reaction, pullback, reaction kind of elements, right? And that's exactly what we were kind of expecting. That is our macro trend, right? So we've got our macro trend here coming down. Then we finally get a micro trend starting. And you can see it right here a little bit more clearly in the market. Let's change this color to be green. So we get this level and we get this this good push down to our level, which we were expecting. We were expecting a little higher. They pushed a little past where we were expecting overall. But we do get our reaction, and we get our reaction pushing up here. Now, at this point in the day, for me, I'm looking at opening range a lot. So the first 30 minutes of the day really matter, and we've already pushed the first 20. So to me, this particular level, in this case, already stands out. This is a level that I'm going to continue to watch, especially because as we look over here, it adds another element of that kind of psychological level, right? So we have a lot of liquidity. We can see it's interacted here a lot. It continues to show up. We get good support in this area. We get good resistance here. So I want to see more interaction later in today in this area. Now, we've got our macro trend has started. We get this big micro trend burst. At this point, we want to see either our micro trend resolve, meaning we finish this micro trend, or we finish this macro trend. If we finish the macro trend, we would expect an immediate push up here, giving us a good entry long. Then we would expect some consolidation and then another chance to get long again, okay? Now, you'll see that this essentially kind of sets up this way. And we'll go through kind of what we're looking at. So this is the same, if you're not familiar in bookmap charts and you just kind of want to see more of a stock candlestick chart, same images you get in the previous one, right? This is the same image. Same basic time is like 10 seconds apart. As we get this, you can see now we get exactly what we were looking at, right? This is our big push down. This was our initial rejection up higher. We've resolved. Now, we were here just a moment ago and we said we needed to resolve down or up. We resolved lower. And if we resolve lower, we expect a strong push higher. Remember, that's what we said. So now this sets up with our potential for that kind of opening range mid opportunity as well. And we can see that this is kind of that pullback opportunity we have. Oh, I was off a little bit. It was a couple of handles lower. It's hard to see it. I just kind of got used to the Mac on this. I think the next image I have corrected that. It does. So we can see it a little bit clearer here. So up here, you've got the opening range high. This is the opening range mid. And this is the opening range low. Okay. You can see we pushed down into that low. We got good strength, good rebound. There's good liquidity in this area. This is our midpoint. We expect some resistance here, some potential to get another move higher, and then go back to that opening range high in this particular case. So we were looking at kind of like that trend reversal pattern. So this is where we can use key levels along with confluence to kind of gain some of that, again, order flow. And then you can see with the continuation why we're looking for continuation. Not only do we have strong buying at basically where our open was, we have a push through and then support for consolidation. So everything on order flow here also tells us that this is a great continuation entry, and we even have a retest entry as well to add more potential profit to it. So just coming into the first initial balance period of the morning, this is a really strong morning for looking at just trend analysis, just taking a trend, waiting for it to set up, following into a trend, waiting for it to break at a specific level. Once it breaks, getting out of a trade. And let's kind of look at trace real quick. Let me pull up Discord, make sure there's any questions there. Sorry, this window is really big. Give me just a second. Oh, wow. This window is very big. Moving a Mac screen to a 27-inch monitor is a very interesting endeavor.
And no questions at the moment, Jack.
Cool. So when we're kind of looking out and we can kind of zoom out, this is essentially what we were looking at, right? We're looking at these three pivot points that we could potentially get within the markets. This why does it do that? There we go. This kind of three pivot point where we get this opening range low, and then we can kind of set up there. Now, another element that I use is my trend analysis. This just kind of keeps me on the right side of trends. This is something I've developed on my own. Now, you don't have to use something like this. You can develop something else that you want. Now, people use EMAs. Mine is essentially a style of EMAs. It's just essentially a consolidating EMA. So you can clearly see here in this particular visual that we've consolidated pretty strongly and we don't have a clear trend direction. Now, if we don't have a clear trend direction and we just ripped higher, my risk is to the downside. My risk just automatically thinking is a potential reversion back, because that's kind of how the market will kind of balance, right? It will, if we can't push higher, it's going to try and push lower. That's kind of where my thinking is. So now I'm looking at Confluence to see if it kind of supports that thesis. In addition to this point right here, if I remember correctly, we've consolidated in this area, and I didn't think that we would be able to hold this area or push higher. So we're looking at the potential straddle. So this is taking into options account of like how to understand what the potential move is for the rest of the day. And if you look here, we can compare essentially, hold on. Why is it not annotating? There we go. Cool. We can compare basically these prices to these prices and see that the straddle is about $20, 20 handles. That means that according to the options market, we're expecting essentially about 20 handles worth of movement. Now, when I was looking at order flow in the book, Liquidity, I really don't see us having strength moving 20 handles to the upside. There's nothing here outside of, these 5 handles, right? However, there is a lot of potential liquidity to the downside. This is that supportive market element, right? If we're not pushing higher, we're going to fall into this area that's going to support us essentially. Some of that passive selling is going to be, or passive buying is going to become selling in that short term. Now, that means, again, my risk is to the downside. I'm looking to the downside so I can capitalize on this potential by setting up for potential trades like that. And like I said, the straddle here was $20. So you can sell a potential, you can use a fly is one potential if you think that we're going to stay within this range, or if you have a particular direction, you can use instead, let's say, a call spread. Now, in this particular case, based on where we were in the overall market, kind of looking at this period in time, I was looking at a call spread because to me, I felt we had a stronger potential to move lower during this period of time than higher in this period of time, meaning I could gain more value for my money that's not currently just invested in the market just from playing that we're not going to go up too much. So that's essentially what I look to set up. And basically I look to sell a call spread. That ended up working fantastic, as we can see in just a second. So now you can see kind of here, we got that call spread set up and we're already starting to fall. Where are we falling? We're following kind of to that opening range high. Not only does our opening range high have, that confluence today of just being that level, but that was essentially where our market opened today. So we need to remember that there's just generally going to be a lot of volume and a lot of liquidity at that particular level. And as we get into Bookmap, you can exactly see that, right? This level becomes very, very liquid. It becomes a very large target. This is where people who are just in the markets long or short for that particular day are looking to flip on their position potentially, right? So understanding that awareness of where your levels are is incredibly important. So again, kind of looking at trace and setting up, I'm expecting some of this downside action, but now you can see we're getting some of this supportive element here. Now, this supportive element means that I'm more likely to see more consolidation as we get to that area, and we're not going to just rip down below it like we did earlier. We're going to have to chew through it a little bit. So that's kind of what I'm looking at now. So I'm selling my call spread and exiting my Delta 1 instruments is working out so far, and kind of looking at that. Now, this kind of comes to the point where we're getting to the area where I have to start exiting some of this stuff because I have to like put these into slides real quick for you guys, because this is literally today. And you can see that the straddle has already come down from that $19-ish to about, $15, $16. So just that straddle alone, we've also captured some of that volatility and some of that time premium on as we've just kind of decayed into this area. Now, kind of looking at where we were looking for the rest of the day, we were looking to kind of come into this area and potentially oscillate around this area. This is kind of where our consolidation point was. And then if we thought we were going to have a bullish opening or bullish closing, we'd push back up to this 66.15. And this is SPX. So we can kind of take a look and see kind of how this has evolved. Since I think we're at 1220, right, on the last one. Yeah. So this is kind of us just taking a look at kind of what's happened since. We get that kind of decay. And again, we get that kind of supportive element down here. A little bit, this is more of a key level than the actual gamma level. And we kind of decay into that gamma level, it looks like, right there. So now I would expect us to see some oscillation and some basic consolidation around this kind of purple gamma bar. That's really what I would expect. Oops, sorry about that. And there you go, we breach it and then come right back to it and kind of get that consolidation. And then we continue having some of that downtrend strength. So we can kind of see the rest of the way that opened up. And then once we breach that strength, then we've got kind of this downside, right? So again, now, where would I expect us to be in this particular case? Well, do I expect us to breach another $20, $30? No, I don't. I expect us to consolidate probably around this point. At this point, I would expect us to be almost the low. And this is, again, all negative gamma right here, except this area. So I'd expect some sort of interesting interaction if we pop back up here just below 6,600 SPX. So let's kind of see what happens next, right? We break down a little bit below, find some support, get pushed back up. And then again, right where we said that 59.95, we get that kind of support. Now, so we kind of expected that, and we expect that because of the way gamma interacts, right? We expect that in this particular case, we expect this gamma interaction point to be right here because this is negative above and below. So this has one of those potential setups for us. So this is, again, kind of using some of those more kind of difficult strategies to conceptualize some of this stuff. If we were to push higher, we would expect a little bit of continuation resistance here with potentially like a strong resistance here, right? So let's take a look and see what we get. We get a little bit of continuation, consolidation there. It's turned negative now, meaning traders have bought that strike in such degree that it's negative gamma, so we expect fluid movement. So we should be able to see that, and we continue looking at it. We get that kind of bouncing action, and we get that interaction kind of right there where we would expect, right? Now, we can see all of this same stuff in Bookmap in just different ways. So here's that strong reaction that we had earlier. See if I can get it on screen, all in one visual. So we can see that we get this strong layered strength here. This is oftentimes going to be that hedging influence, just waiting as liquidity to kind of absorb some of these positions as they're setting up. And we can see that as we get this push higher, similarly, they're unwinding these positions to some degree, and they're doing so kind of in these similar areas, but not to some degree in the mid lane, right? So they're not needing as much hedging influence kind of going up. So it's kind of a thinner market moving higher from this downtrend, right? So we've already pushed really hard down. We've got this kind of supportive element. We're expecting to push back faster, essentially. And then again, we're expecting this kind of consolidation here in this mid area. And that all comes down to some of those elements where we expect these hedging influences to occur. So you're taking a look at, again, order flow, not just in options complex, but you're looking at order flow within Bookmap, essentially. Ellie, if you're having problems and you're on your phone, turn your phone off vibrate, and then manually turn your volume up, and that might fix it for you. So in addition to kind of some of those looks, right, and that's kind of looking at the way we were looking at this initial area and this downtrend, let's take a look at some of that. Oh, not the button we wanted there. Let's look at some of this morning setup that we had to potentially, well, let's just zoom out a little bit here. So we were in this morning market and we were talking about it earlier. Let's kind of get in here about right here. So now you can see just coming in, we have some very strong liquidity just kind of resting in this area during the initial downtrend coming through. Now, as we get kind of some of this liquidity, we actually just don't see any resistance at all. There's just no real buying on this entire downtrend down until we reach essentially just that kind of gamma level area that we were kind of expecting within the trace area. We actually breached through it just due to the sheer magnitude. We can kind of see that a little bit with the hero tool in addition. So if you're looking at not just order flow volume, we're on equities we want to look at, sorry. Yeah, so we can see just looking at hero equities here, kind of zooming into the same amount of time range, right? So this is what I was looking at this morning, this initial 10-minute period. You can see that we're 680 million down negative to the negative delta side across the equities complex, meaning the equities are very heavily being sold. Now, to me, this is a very dispersive type of element. When I see that one of these is doing something very extreme and a market's following, I want to look at the other one and see that it's doing something not this typically, right? When I'm looking for a potential reversal strategy. So S&P equities looks at the equities complex, just the equities, none of the indices. So let's take a look at the indices sections, and you will see that over the same period, it is not nearly as negative. In fact, it's slightly bullish, right? However, price is considerably decreasing. You can clearly see price is decreasing, but if you're looking at indices options, the skew is shifting in them, and we can see that overall they're relatively bullish. Now, what does this mean? Well, if price is going down and we know that the indices options are increasing, but price isn't reacting to them, what happens if the indices options stops? What should we expect, right? So here, we've stopped. And what happens once we stop? All of this delta starts bleeding out of those options, and we get a lot of that reversion. And then once we get some of that reversion, we start to see some of these positions start to change. And we start to get some of that other interaction at the very levels we were looking at, and we start following more of the indices options look. And you can see if we zoom in there, again, it continues to be bullish and we get that kind of dispersive pattern. So what we can infer from this is that there is a market shift, essentially, meaning like some equities are getting sold, indices are getting bought, and some equities are getting bought. So we can see a shift within different kind of equity elements. That's what we should see. Let's go take a look, and let's look at the ETFs. We can see for the most part, we got energy up. We've got XLC, so communications has barely moved. Financials has barely moved. And yet tech down 0.5%. We've got discretionary down over 1%, right? So we can see some of these areas are getting relatively sold. Some of these areas are getting relatively bought. And we can kind of infer that just understanding the different order flow, right? So these become kind of just interesting topics to kind of latch around and understand, because when you understand them, you can leverage these in different areas to know when to enter a trade, when to exit a trade, and kind of when to kind of min-max some of those areas. And then kind of just the last thing looking at in general is not just when you're looking at pictures like this, but also having like an overall longer time frame bias and kind of looking at something more like this, where you can take care of longer term strategies. And this kind of comes into that risk mitigation where my portfolio is not just in day trading. I'm balancing my risk across multiple durations. So even if I was slightly long the market today with, say, a couple of futures contracts, I'm not getting blown out of the water if we don't move anywhere, because I would have capitalized on some of my longer term trend positions looking at tools like Compass or other tools that utilize volatility, such as earnings. Having risk diversification can really impact your overall metrics to your overall portfolio. Those are just kind of some of the areas I look at there. And then this is kind of mostly of what all I had for Bookmap. So if anybody had any questions about specific trade strategies or looking at specific setups, we could look at those within futures if you guys want, or we can look at some other stuff as well. I see Steven and Shark.
Yeah, guys, get your questions in for Jack. You got a lot of information here, so hit him hard.
It's a lot of stuff.
Yeah.
Yeah, Steven's been around forever. He knows a lot about me harping on non-counter trend trading. He's my favorite counter trend trader. But yeah, you can see a lot of this clear area. Like, so all this order flow basically comes out to be, okay, hey, this is a double bottom, right? You could just sum it up there. This is a key level, right? Double bottom at a key level. Why wouldn't we take the long, right? It makes sense when you just look at it that way, but this is how you look at those. Risk management, Duzman. So when managing long-term positions, what are some skills from day trading that you carried over? Risk management is number one. Number two is the journaling process. Remember, so every trade that I put on, so whether it's, an options position that I'm putting on for 45 DT, right? Like let's say it's an income-driven strategy, right? I'm just selling an option, and it's out at the 45 DT, and at 21 DT, I'm closing or rolling no matter what. I still document it, right? Like I still put the note in for that. And by having that, I absolutely just adhere to it, right? The only time I'll do it otherwise is when I'm taking risk off the table. So if, let's say the strategy is working, but I don't like it, I'm not going to argue and say, oh, well, I need to stick to my strategy. It's working. I can take risk off the table at any time. So the only time I can override my own decisions are when I'm removing risk, when I'm making my account bigger or making it not less. Combo levels. Okay, so Steven, this is a good one, okay? So let's take a look at this from the total OI model. Let's go into here. Okay, combo levels. So combo levels, actually, let's go up here, are going to be taking a look at the options complex from a total OI standpoint. So looking at everything reported. So it's not parsed, it's not reduced, it's just everything reported. You could get the same information yourself with no special tools, that kind of stuff. And it combines XSP, SPX, and SPY. And then your question would be, but isn't SPY and SPX not exactly, 1/10? Correct. And that's why when you mouse over these, they're very slightly off of where you would expect. $1 here, $1 there. That's why. It's because of SPY kind of taking in that premium and kind of shifting it off that even dollar mark. Now, the reason why I really like combo strikes and why I push for this model to be put out and essentially kind of more in the front is because as an equities trader, I constantly see us blow through strikes like SPX or ES strikes. And I know it's because SPY has such a notional value that that's where we're hedging. And I talked with Brent and they really like the combo strikes model as well. So they really started digging in and started getting it out. Now, I hope that we can continue getting it, but I want to get it towards the synthetic OI. So it'll be like combo strike synthetic OI version. That would be pretty cool, but it takes time to get these things built. But that should help you there, Stephen. D&T matter. We were just talking about macro versus micro. Yes, exactly. That was kind of what was funny about it was macro versus micro trend. And in my opinion, like Bookmap makes it really, really good. So for those that don't know, I came from order flow the hard way, price ladder and footprint style, right? Like hard way. And it irritates the eyes when you're looking at this and trading equities at the same time, right? Especially a price ladder. It moves around so much and you're keeping so many numbers in your head, it becomes very difficult. Now, the thing about Bookmap is it makes it visually appealing for me to see order flow and volume that occur very quickly. And with my settings, the way I have them, I can see things like this is a low volume print sell. I expect consolidation and reversion and strong interaction when I come back to it, right? This down here is a strong rejection higher. If we don't interact with that, we're going to react hard to the upside. And sure enough, right? So you can develop those kinds of concepts, but Bookmap makes it easier for my brain. It makes it easier for my eyes. I can pop in and pop out and I can see it much clearer. So that's really kind of the areas there. And that's really why I like Bookmap. It's because these trends, these zero prints, these reversals, they make more visual sense to me. Lower time frame counter trend reversals. Yeah. So you want to resolve whatever your trend is. So kind of just looking at this one chart below, let's just take today as a great initial example, because in my opinion, it really is. This is an absolute monstrous downtrend. You are not longing this market. You are not. But are you shorting it? Probably not. That's a monstrous downtrend, right? We saw the 9 EMA right here. Like it was just like, kablook, like it just went straight down. So we're not shorting the market, but we're not longing the market either. Well, that does provide us opportunity, right? We could sell a put spread, right? We're not longing the market, but we're not shorting the market either. We expect here or slightly better. So that's kind of our downtrend. That's our macro trend analysis right now. That's where we're thinking. Now, all of a sudden, with no clear reason, no clear impetus, meaning like there's no tweet, there's no Twitter, there's no economic event, we get just a strong order flow reversal. That's all this is. This is nothing special. This is just an order flow reversal, right? This is just, hey, ran out of sellers, we moved too fast, we're reversing higher. That's our micro trend. Now, we have a macro trend and a micro trend. We need one of those to resolve. So let's slide our time frame forward a little bit, and we are right here, okay? This is our point in time where we have clearly a macro trend and a micro trend. We know where our micro trend is at. We know where it's supposed to be. We need one of those two to resolve, just one. As long as one of those two resolves, we're expecting the other one in our strong impetus. So in this case, we were expecting downside. Again, this just gave me another area to sell a put spread here. I ended up with a lot of iron condors today because of the way I set this market up, but it worked out great. So we're expecting kind of another push down here in my case. But we don't care. Our next actual trade, our non-aggressive entry, is just waiting for this micro trend to resolve, or the macro trend. We see that we get this macro trend resolved right here, literally almost to the tick. At this point, we're looking at, okay, we've got a double bottom here. What are you thinking is going to happen? So you're looking at potential order flow events to turn positive. So, okay, let's go look at 0 at that time in the morning, like we said. And we can kind of see, zooming on a Mac is very interesting sometimes. We can see that very clearly. We're shifting here to the positive. And as I mentioned in equities, we swapped over there as well, right? So you can see in both of those, our order flow from options has swapped. So really all I'm waiting for is basically spot volume, but I want to be in the trade before that. So again, like I said, I sold more put spreads. And then I was looking to take this right here. And this is my opening range mid to continuation high. So I've got my break, pullback, good consolidation, and strong reaction. And like I said, that midline area was exactly where I was expecting it. Great continuation right into the trade. And then again, kind of setting up, right? Like, so we've got a good trade here. We're consolidating, but we don't have a new micro trend developing. So this is a potential place for me to add in or just keep. I added in and kept. And we broke a little higher. I took some off right around here. I don't remember how much. Basically, I just paired it off with a fly. And then we get a little bit of an entry, and I push back in a little bit, and then I resolve a bunch of positions below. And that kind of set us up for that kind of downtrend. So it's kind of looking at those macro and micro trends. But this is an uptrend now. This is now our trend, right? So until we get to this point, we're looking for something to break us. And it doesn't come until really, I think about another 20 minutes here. Yeah, there it is. And this is where we get that break, right? So now our uptrend, that was our macro trend, well, it's broken. So now we expect something to happen, right? So that's kind of how that's set up. And then again, I do utilize this trend indicator. I know that not everybody has it because it's mine. But whatever trend analysis you can to stay on the right side of things, a VWAP or VWAP in general is going to be very, very good. It's going to be very, very similar. Yeah, the resolution. Okay, so let's take a look at NQ. We haven't even looked at NQ today. Let's go back to this morning. This will be super blind. So, oh my gosh. Sorry, zooming in on Mac. We're in space. Sorry, guys. This is not Bookmap. This is Mac. Okay, cool. So kind of taking a look similarly, right? We've got this very, very, I'm doing my best. Sorry, Shark. There we go. We finally got it. Okay. Oh my God, I didn't even do anything. All right, we're going to give up on NQ, Shark. We're going to come back over here, buddy. I tried. I can also pull up examples from previous days too. But let's just kind of take a look at this. So we got this consolidation, this continuation going down here, right? We get this strong rejection and then consolidation pattern right here. At this point, this consolidation pattern at our expected level resolves this initial push lower, and we expect continuation to the upside because we've got to push back lower. So now we're kind of expecting this. So now, once we make this area up here, we want to see a push lower. And that's why we're looking for this to potentially reject to this downside, essentially. Looking for another one today. There's not really enough of a range to see it. We don't have enough trending moves because it's just kind of within the opening range. So it's kind of limited, but that's essentially what I'm looking for the ES. I'm looking to continue to fade to this kind of midline level for the rest of the day. You asked Moby the same question.
Hey, Jack,
Oh
I
yeah.
have some questions for you, actually.
Yeah, go ahead.
So I'm wondering about like your trading, and I understand, how you're setting yourself up for the day and what you're looking at, and you went through all the
Yeah.
process here. But are you going directional and then options hedging on top of that? Or are you just trading options and then maybe hedging on options later in that as well? Or how many positions in options do you have
So
throughout the day?
this morning was very, very complicated. We were short the market with futures, just entering the morning because of that initial trend that I kind of showed with that longer term view from the London Open. But I didn't have a good target for our time frame because everything that I was looking at for options wise wasn't really strong. Like there wasn't really a lot of kind of strength that I was expecting. Kind of like I was talking about within Trace here, like there was nothing there. So for me, it was like, okay, I need to look lower and I need to look for liquidity that's going to help set me up. So those are the two areas that I was really, really looking at. And it kind of gets blown out looking when you're zoomed out. But that lower area of liquidity was where I was looking. And it was because of the options and then this just kind of just setting up with all of this liquidity in here, set it up so that I could exit my short futures position, enter a short options position, and then also set up for potential long futures positions. I wasn't long yet at this point, though. I didn't become long futures until this point right here. So I use futures options and futures on options occasionally, just depending. I don't typically trade SPY shares at all. I'll use futures or I'll use SPX or I'll use XSP. I'll just use options in general instead of SPY shares. I don't want to pay for the dividend. I can just get the dividend myself if I care about it because I understand the option. And then I use futures and futures options to reduce my cost of carry. And those are just kind of more important elements when you're looking at just kind of the time value of money. So for me, my account's kind of large. So for every dollar in my account, it has to earn a yield some way, somehow. And that's why I don't like to leave a lot of money out of the market. So if I'm in a futures position like today, like I was mentioning that risk to the upside or to the downside, I was looking to add call spreads for most of this afternoon, or for most of this morning rather, because I thought we were downside risk and I didn't want to pay to just own my futures position, right? Because I don't want to do that. I'd rather have the market makers pay for that if I can, because I don't believe we're going higher, but I also don't want to miss out on the opportunity. So it's just a way to hedge your risk. So yeah, all of the above on a daily basis too.
Gotcha. Okay. Yeah. Thank you.
Yeah, and I love this stuff. So the opening range has always been my bread and butter, looking at macro and micro trends, setting up off of those, and then leveraging gamma off of it. It's always worked. It's always been just kind of a nice, easy kind of go. And the biggest thing I could do is just stay out of my way on a trend. And I feel like you always make money if you don't fight the trend. Don't jump in it, but don't fight it either. You got to go swimming in order to be surfing. At least that's the way I've always taught it. So, yeah, this is kind of how I've always looked at it. And then from there, the options market really kind of jades my positions overall. Here's another question. I thought John had a question, but maybe he deleted it. Yeah, I think he deleted it. It's probably something I answered at the same time. But overall, though, those are various ways I look at things. I think that key levels are the most important things that you can have, and that just sets your bias. And then once you've got your bias, you're just waiting for the market to either meet your bias and you make money, or it doesn't meet your bias and you lose money and you need to reevaluate why. And then you write it down in your journal and you talk to your friends or you talk to your peers or your mentor. And then from there, you just continue iterating on that kind of response. And it's just tried and true. And the responses that we give in the coaching are the same every week. You know, if it's a new trader, the first thing we talk about is, What's responsible journaling? What's responsible like trading? Like pick one thing. Like right now in the Bookmap Junior Academy, Bruce is looking at trend strategies and like catching the reversal potential setup and things like that. And then we had another member who was already on the next step of it and didn't even realize it, right? But they documented it. Now they know. We talked about it, and that's just going to help you over time. And just iterating on these concepts over and over again is the way you get better. You just get better at this stuff by staring at it for hours every day. So it's easy stuff to look back up.
Are you holding options overnight, or going up? Is it 0 DTE only, or are you doing weekly, or a couple of days, or?
My favorite strategies right now are looking at 0 DTE short options and a longer term kind of strangle, so short a straddle. And these are in days where I think volatility is going to compress. We're not going to go very far. Today actually would have been a good day to do that. I ended up essentially in those positions, but I didn't feel it from the morning. I felt downside was a little bit more optimal. But yeah, those are my favorite positions, is holding some of those 0 DTE, multi DTE kind of things into expiry and letting those take profit to some degree or expire to whatever their maximum potential is. And then in addition to that, 3, 5, 7, and then 20-day short-term options. Those are usually volatility style strategies. Those will be mostly calendars. So short one option, long another. Rarely it'll be a strangle straddle or anything like that. And then income-based strategies would be anything 30 days or longer. So, but yeah, I'll have multiple strategies. I think what was this morning? 47% of the portfolio is currently in options. The rest is in bonds and long positions.
Wow.
But that also includes synthetics. So you can be synthetically long a stock just with options. And that includes a lot of those.
All right. Okay. All right. That's interesting. So today is today kind of rare. I'm just kind of curious on this, that you were directional in the futures. Is it mostly just you look for an options play on the kind of at the key levels on the higher time frames, or you're doing the directional and then hedging with the options? I know you said everything, but I'm just kind of curious if you do go directional a lot.
Hedging. Today was directional hedging. Yeah. So for right now, my overall portfolio is downside bias, and some of that is not to my desire, right? Like I have, let's see, I'm short the 195 straddle in Google for one lot, right? That's not a great position when Google's at like 240, right? That's a terrible position, but that's part of my risk. Like I've already defended the position. That's just kind of where it's at. I just have to let the position work its way and then manage it. But in general, right now, I'm more downside. I felt we were a little exuberant due to the rate cut and the macro fundamentals. We chased a little bit. So I need some of this short-term kind of like downside hedge a little bit and kind of sell some of those futures away, or buy those futures back and then sell some options to kind of like bide some of the time. So yeah. Do I look for order flow events such as stop run sweeps? And do I monitor iceberg activity? Icebergs less so, because they're a lot less empirical than they used to be. I really like icebergs in general. I feel like they're very good confluences. But in the market, the way we've had it more recently, the liquidity is just, it's definitely more impacted by options hedging at some points. And I feel like Trace kind of shows some of those points a little bit more clearly to me than actual sweeps and stop runs. But I still do keep track of them. I have not migrated it up to the MacBook though. This is day one of running it on the MacBook. So I'm kind of just adding things that I can see performance and try to get a feel for things. I don't want to throw everything at it all at once. The orange line at the bottom, so I think you mean this line down here. This is going to be the opening range low. For those, a lot of people have seen my charts, Amir. And you can see like in my charts, I usually use orange or yellow for the opening range symbols just to make it easier for people so that if they see multiple charts, they know exactly where those levels are. Yeah, Shark, anytime, man. I can't wait to get questions from Laura later.
All right. Excellent. Well, I think, well, let's see, Amir is typing, but we've gone through all of them, all the questions here. Any last minute questions, let us know.
Last minute insights from me. If you don't know, you should go to the Bookmap Academy and sign up if you are not. Academy. You should go right here. Okay. Bruce mentioned I was one of the first coaches. We were literally trying to get this organized and find the times and set it up, and it evolved due to you guys and your feedback and the way you guys were interacting with it. And the way these pro trader webinars come about is because of these very same kind of topics. So if you aren't part of the academy, click here. You can also kind of go to the Discord channel in general, sign up there, like do this stuff, because you will gain one or two of these steps that I was talking about earlier just by doing this stuff. Like it's so easy to do and it's fun. You get to talk to people. Options are nothing. Options are just math. It's just pluses and minuses. It's just green and blue. That's it. It's fun stuff. But yeah, if there's no other questions, let me know, guys. Like I said, my Discord is always open. You're always free to ask me questions. You can add me as a friend. I will add the friend, and you can ask me any questions about any kind of market topics. So I appreciate the time, Bruce. It was great. I look forward to all the questions that I'm going to get in DMs that I usually get later because they want to wait to ask me for some reason.
Yeah. That's well, there'll be an overflow maybe in the Bookmap Academy room there. So yeah, keep your eyes peeled, Jack.
Yeah. So let me know if there's any questions, guys. I appreciate it. But I love this stuff. So if you have any questions, options, anything else, let me know.
Excellent.
Have a nice day.
Thank you. Bye-bye.